Welcome back to Beyond Revenue, where every Friday we break down the real strategies and decisions behind revenue growth. I'm your host, Michael Jäger. This show isn't about theory, it's about what actually works, and sometimes what doesn't, from leaders who are in the arena building companies in real life. Today's topic, it's one that's becoming more and more relevant than ever, from finance to growth engine, how CFOs drive revenue transformation. And today, joining us from New York directly, Robert Checchia, CFO of Benzinga. Robert, I'm very happy to have you on the show. Great to have you.
It is my pleasure to be here, Michael. I've heard a lot of great things about you, and I was really looking forward to this chat and just get down to the reality of things. So it's going to be good to have this human conversation. I love this.
I'm really looking forward to our discussion. So, Robert, you spent time in investment banking, private equity, corporate development. Now you're leading finance as CFO at a high growth company. Before we get tactical and give us some context. So what does your role look like today at Benzinga? Maybe give us a little bit background of Benzinga so our audience in Europe is getting to know you as well. And let's put it directly with one question. What's your biggest growth challenge you're navigating at the moment?
Okay, great stuff. So let's start from the beginning. Benzinga is a financial media business. Today we cover all the U.S. stocks, right? So we have 24-hour coverage on all U.S. equities and markets. I invite the European viewers as well. We have 3 European sites today: the French site, the Spanish site, the Italian site, with more to come. But basically what we do is we want to empower retail investors to have the same level of information to make the same high quality decisions as the professional investors. Okay. So we have a variety of different products. We create our content that's on our site. We funnel all those pieces and analysis through our API products. That's a big part of our business. Today our biggest clients are asset managers, the brokerage firms, prop trading firms. So they all consume Benzinga. We're one of the most read content producers on Bloomberg. So that's the voices out there here in the U.S., right? And it's everything that touches retail investors is Benzinga. Okay, so be it our news page, our subscriptions products, our API news feeds, everything that touches the world of retail investors, that is Benzinga. Okay. I joined Benzinga 3 years ago. I came in mid when the private equity group was already invested, right? Prior to that, I was at another financial, a fintech, right, related, similar space. But before that, my whole career was in finance, be it in private equity-backed companies or in investment banking / consulting roles. And that background and experience was very different, right, than coming in and sitting down and being an operator, right? There's definitely pros and cons, but I think it. This is like a unique skill set because you theory and practice, right, in place. So just an intro to Benzinga. Thank you.
Thank you so much. Yeah, you've built models for hundreds of companies, right? What's the one metric most managing directors, founders misunderstand?
I think a big one is CAC, customer acquisition cost. Okay, because people say, "Oh, this was a direct cost to get in." Yeah, but you're not considering the salary of the sales reps. You're not considering the onboarding team. You're not considering the content to warm up the lead. You're not considering, everything to get that customer in the door ready to go, right? So then when they look at, I have 90% margin, that's really a misnomer, right? So I like to call it the blended CAC or the real CAC, right? Which is the total go-to market divided by the net new customers. I think once you break it down into first principles, everybody makes sense of it, because they thought that they were selling something or getting with a high margin. Like, oh, wait a minute, the margins are really lower. So maybe another product with a higher margin profile makes more sense. I think that's one that usually gets confused.
I really like that because especially is one topic we really look at, especially the blended CAC, because quite often we don't even see it as a goal. And then managing directors go in and say, look, marketing should calculate. It's like, I think executives should define that because it's a management topic if you don't steer your marketing activities without a CAC. So I really like it. Investment banking or CFO, which one prepared you better for real growth?
I think neither one alone. It was a real combination of both. and honestly, from my personal perspective, I think that was my cheat code. I started my career in PE-backed companies, but boots on the ground. Okay, so
Mm.
it wasn't just an Excel spreadsheet for me. I had a safe, with all the checks and cash and everything in there. I had to take care of that, send it to the bank. I saw the operations. I had to effectively carry things out. So I think starting there, moving into IB and consulting really brought to me, an understanding of that world. But the IB slash consulting world, it gives you rigor, it gives you a lot of analysis
Mm.
and a lot of tools, and it gives you a lot of rigor, right, and ethics to work through those 90-day sprints, right. But it's also a world of like perfect information, clean data rooms. It's very
Mm.
where everything is in theory. So I think the mix of both really, really was something that differentiated myself. And I invite everyone who is sitting in the finance seats to go and visit the operations, get their butts out of the chairs and really go visit what's going on, in the company.
I really love that because that's what we're proclaiming, right? We say we are operators and we know how to do operation to scale companies, and now we move to the consulting side, helping as operators the other operators to optimize. So I can totally relate, and I think that's quite important because then you can really focus on the performance and you much better understand what actually matters, right? Because in theory, a lot of people have built great things, but practice is quite often quite different. I would say let's jump into the first tactic which worked for you for real close growth. Please explain a little bit what it is. What did you do? What was the problem you solved, and what was the outcome?
So there was a company that I had first joined, and one of the things that I noticed that the P&L was structured the way most media companies structure their P&L, which is by department. So you have marketing budget, content editorial budget, tech budget, right? Clean org chart, but you don't really have a view of the operation. You have a clean ledger
Yeah.
and an org chart, but you can't really see what's going on, the contribution margin, right? So no one could tell me what each revenue line of dollars spent was actually feeding, right? So we had all these costs, but how were those spend generating us money? So we were optimizing towards an org chart, but not for the business, right? So we
Mm.
rebuilt this whole financial model into the businesses that we had. Okay. So, and by business, I mean the revenue, separate, distinct
Yeah.
revenue streams. Okay. So
Nice,
we
like it.
mapped all the businesses, like a matrix, right? All the businesses going down and all the shared expenses going across. And then we knew, okay, this team supports this, and this business. How much? Maybe it's 30, 30, 30. Maybe it's 50, 25, 25,
Mm.
right? Just making this up. But once that was done, we could really see, okay, what is our effective CAC, right? Like we were discussing before, and what's the LTV within each business line. And we could really say, okay, resources are limited. We're going to pour gas on the fire on which business? This one, and this one, right? Oh, this one
Mm.
has more opportunity in the short term. Okay, let's capture this one, plant the seeds for this next one, and go around. So I think that restructuring things, number one, you said it yourself, right? When we have alignment on definitions and calculations, which we did as well, one source of
Mm.
truth with all the data. What started happening is the business leaders for these revenue lines and for the costs and service centers, they started coming to me with requests and with analysis, right?
Mm.
So I just built the tools and gave it to them, and they started coming to me. Hey, I have an idea. Hey, I want to do this. Hey, we need a new resource to do this, this, and this. And you could start measuring the effectiveness and the ROI on each initiative, right? So it's one thing like we talk, well, the CFO is the hard coded guy, the guy that just says no. No, that's not the case. We have to say no to certain things, but I'll be the first one to, again, pour gas on the fire on something bigger and better that we think we're doing. So when we started reallocating resources away from lower producing margin initiatives to higher producing ones, that's when I felt like, okay, this is working, and people coming to me and asking for more ideas and
Mm.
reorganizations with the data and tools we provided them. That was a real good, empowerment moment for the team and delivered more results.
I really like it. Moving away from the internal view into a holistic view. That's really great. What's a second tactic which worked for you?
I think I want to mention two sort of external tactics. Okay, one is pricing. Okay, and I'll say this up front here. This is one of the most underrated levers in media or SaaS businesses because the operators they feel it's risky, don't touch it, right? Oh, it's working. The client is happy with this price, don't touch it, right?
Mm.
Which is a misnomer because they don't want to upset the clients. But what happens is you are managing, you're basing your pricing on a gut feeling most of the times, right? And what's even worse is you could catch instances of the same product being offered to different clients at different conditions, right? What happens? People talk, then you lose all your credibility. You can't save face, right? So a big part of the outside facing perspective to drive revenues was we have to standardize our offerings, right? Number one, we have to have the same offerings across the board. Of course, you can have different conditions, right? Depending on terms and everything of negotiation. But once you get that standardized view, different packaging, you can go to your clients because clients don't churn because of price. They churn because they don't see the value in what you're proposing to them. Once you have that perception of value, right, you convince the clients that the value is higher. It's a lot more on communication of value than it is on pricing. So I think pricing is the first one that I wanted to mention. The second one on tactics is what we were discussing a second ago, is related to expansion in new markets. The CFO, if you're a CFO today and you're just running the books, the accounting process, you're not a CFO, you're a controller. Okay. What really differentiates a CFO is business development, is the strategies. How is he building the tools and optimizing resource allocation for the company to grow? Okay. One thing that I'm very proud of at Benzinga, for example, is we didn't have an Asia operation 2.5 years ago. Right? This was something that we sat down, we studied the markets, we understood the demand, we saw the gap, and we said, let's go for it. We obviously, it was a risk, right? But and today this is the fastest growing part of our business is in Asia. Nice. And I'm very proud to be part of that. So it's not just control spending, don't spend here, It would have been very easy for me to say, no, listen, our margin is going to be higher because I'm not going to hire anyone for Asia. But guess what? That bet, 2.5 years ago, today it's our fastest growing part of our business. So it's the second tactic is attention to pricing and value. Okay, that's a big one, and really business development. I think using the analytics, the rigor that usually the finance people have. How do you best service the business to grow forward?
Interesting, nice, like it. Especially around the value topic is something what we play with a lot, and regenerating the entire operations against what's the real challenge of the client and what's the value we bring, because then you have a different discussion. What's one tactic which you applied which actually didn't work, and why didn't it work?
This I think a lot of my financial brethren here, they're going to it's going to resonate with them because it's I'm going to be honest here. It's very common, and I've fallen into this trap many times, which is to over-engineer models and forecasting and analysis. Okay, I have my background is in math and STEM, and coming from the finance world, it's very easy for me to get into it. Oh my God, let's create an awesome model here, right? And I did this a long time in my career, but we got to find the sweet spot between rigor and effectiveness. Like if this is I think we have to start by answering the question: what is this analysis going to be used for? If I need it in 24, 48 hours, okay, a simple analysis can do. If I need something for a board meeting for allocation of a lot of resources, okay, let's go deep, right? But I think when I say this is something that didn't work, was there were learning that sweet spot. I think takes a little bit of time, and that's Absolutely. Where the operator blood in me, starts to flow, because it's like, why am I doing this? I have a lot of fun, thinking, theorizing, drawing out the maps, doing all the math. But then again, you're like, okay, this didn't add value to the business, right? So let's go 80-20 rule, right? You'll capture 80% of the value, usually with 20% of the variables in the model that you create. So I think that's one thing that, tried and tested a lot of times. It didn't work. And then, now still building that muscle. I think that's a big one.
I really like that as well, because what we're always trying to say, only measure what you actually have action items for, because sometimes, especially if it comes CFO-led controlling, right? There comes sometimes they measure everything. It's like, what do you do with these numbers, right? It just generates everyone's work, and it's more controlling, as you said, than actually bringing value. So And then it holds up everyone, right? It makes everyone ineffective, especially if we build things around where we do not consider the operation. Yeah, but I really like it. So let me summarize. Yeah, tactic number one, you said, is you rechanged the P&L from a department structured way into a holistic view per revenue stream, which allowed you to define the resources needed along the journey, define the cost connected, and could then on the one side calculate which cost we had effectively on each revenue stream, as well as you could understand what was the outcome on each euro spent. In other words, you changed the way from an internal view of cost allocation and revenue streaming to a customer focused view on how we sell one product as one team through one channel or multiple channels, but each channel, each product on its own way. So not having blended metrics, which didn't let you understand the real business. If you have anything to add, obviously always do, because not sure in the short time. Your second topic was pricing is one of the most underrated levers you quite often see, especially because everybody comes up in the beginning of a price most of the time with a gut feeling and not really with a sophisticated way of doing, because it's hard to start. So for refocusing the pricing around value, really understanding what is your product solving for them, what are maybe the costs associated with their pains, to really understand how much can you price your product because it generates value. Put the discussion around value, pricing becomes uninteresting or not the most important topic, because if you're convincing in value, they will buy anyway. And then the third tactic, which didn't work, is don't over theorize the way of modeling your business, because theory most of the time didn't make the people very, very successful. It just helps you to better understand, invest in the things where you really need the depth of a model. On the other side, if it's a short answer, model it quick and dirty to really understand what was actually happening. Anything to add on this
Yeah,
this topic?
yeah, that's a great summary, Michael. Thank you for those points. I think if we because those are examples, but what I try to remind myself, what I try to install in my operating system here is behaviors follow incentives. Okay, so put the right incentives in place, right? And that's when we were talking about pricing, right? It's really what we're incentivizing them to go for the higher value. When we were talking about the tactic one, the P&L, we were laying things out so their incentives would be to chase the higher value sales products and businesses. So the behavior, let's set the incentives right, and the behavior will follow. Right. That's one thing that I try to remind myself always. And because you have the stick and the carrot policy. Usually the carrot policy works a lot better. So that's why we always try to build, and that it's not just comp incentives, but it's business incentives throughout growth. Right. I think that permeates on everything that we discussed. But yes, I think these are a great summary on the examples and tactics discussed.
Robert, thank you very much. The session was incredible practical, and I think we all took something out of it. Before we close, where can the listeners connect with you and follow your work? Is it LinkedIn, or are there any other channels you're using?
Yeah, I'm always open and free to take anyone on LinkedIn. I'm also available on Robert at benzinga.com. That's Robert at benzinga.com. Please feel free.
In the notes.
Feel free to reach out to me. I like building bridges with everyone. So even if it's, hey, I want to discuss something here, I'm always open. And everyone feel free to reach out.
That's it for today's episode of Beyond Revenue. A big thank you to you, Robert, for breaking down how modern CFOs shape revenue transformation. If you found this episode useful for you or for your network, please share it with your managing directors, with your founders, or even your just friends, how CROs or finance leaders who's navigating to growth right now could be interested in it. Always share our episode. New episode drops every Friday. Practical, tactical, built for operators. I'm Michael Jäger. See you next time.